Welcome to Oregon Cash Flow Pro. My name is James Barber, and as usual, I'm here to help you maximize your cash flow. We're trying out a new broadcast system, and we're going to be streaming to a couple of different locations here today. So bear with me if we have any difficulties, but I'm hoping that through YouTube and Facebook and Twitter, we'll be able to see your live comments as they come through. And we're going to be welcoming our guest, Jennifer Miller with Coastal States Bank. And today we're going to be talking about the cash value line of credit product that they offer, which I've recently been able to acquire, and I'm pretty happy with it. And I know a lot of my viewers will be interested as well. If you can hear me, if everything is coming through, leave a comment. Tell me where you're watching us at, and that the sound is okay. And it looks like we've got our guest here waiting to come on. So as soon as we find out that everything is up and running, we'll add her in. Hey, we've got somebody in. Okay, so we're up, and it looks like you're on YouTube. Sounds good. Loud and clear on YouTube. Thanks, Way Out West and World of Tech. Appreciate that. We're going to go ahead and bring Jennifer on then. And Jennifer Miller, how are you doing? That's our first time seeing each other face to face.
Yeah, doing well. How are you?
Doing great. Doing great. So
Good deal.
We're here to talk about the cash value line of credit, which is your specialty there at Coastal
Sure.
States Bank, my understanding. And this is going to be a live stream, but I will end up editing it and putting it back out as a regular video. So if you happen to miss some of this, you're welcome to come back and check it out later, any of our viewers. And we'll try and clean it up a little bit just so everything is nice and smooth. So we're trying out StreamYards for our live stream here, and I've got some flyers that Jennifer sent me that will be showing up on the side here, so you guys can kind of see a little bit about the product, and you'll be able to see eventually what the application looks like for business and for personal. So Jennifer, why don't you tell us a little bit about you and Coastal States Bank?
Sure. So, about myself, I've been in the industry, the financial industry, banking for over 30 years, and have done just about everything in banking: personal, private banking, commercial, high end, and worked with various different types of products, from licensed products like in your space, James, to regular loans, deposits, treasuries, you name it. So I've been with Coastal States Banks for just under 3 years. Coastal States has been around for the past 11 years. We broke $1 billion in assets this past year. We're doing incredibly well. We're very financially stable. We're actually headquartered out of Hilton Head, South Carolina. And we have various locations throughout the Southeast, including Atlanta, Savannah, Macon, North Carolina, North Georgia. And then we also do things on a national platform, including our cash value life insurance program, which we're familiar with, and we'll talk more about in just a minute. And we offer commercial banking services throughout our Southeast territory. We're national home lender, an SBA preferred lender, and we also have a private banking platform and some branch platforms as well. So we're considered a community bank. However, because we've got several specialized platforms, which makes us very unique.
All right. So what's the difference between, I know there's community banks, regional banks, and national banks. So at what point do you become a regional bank? Because sounds like you guys are expanding.
We are expanding. We just went through another acquisition, which was local. But I think, what makes you different certainly is by size. And $1 billion in assets is not considered a regional size bank. But a regional size bank, you might say, has multiple branches, maybe I'm going to say 15 billion in assets. And your probably publicly traded. And then obviously, when you move into the larger national banks, you're talking about platforms like Bank of America. I would not see us becoming that. One of our things that we look to do is provide very, very high levels of touch and service levels with very high level of experience as well. So even though we have national platforms, it's important for us to be high touch with our customers. We don't provide 800 numbers. You're going to get a live individual with team members of direct support as well.
Oh, that's great. Yeah, that helps lead to one of my questions I had down here was what is Coastal State's goals, or what is your focus as a
Yeah,
bank?
our focus is to really provide the highest level of service possible to our clients, and that, along with ease of doing business, those are things that we find very important to our customers that we work with. It's also to provide a high level of expertise in the financial services business, banking products, which is what we deliver. So our team in general does not have any fewer than 20 years of experience. You're going to find 20 plus levels of experience with our team. So expertise, high level of service, high level of touch, with the delivery platform that is easy to use and also very user friendly.
And I see that you work with business and personal.
We
Do you
do.
guys have a bend towards one or the other? Is there?
They both go hand in hand. I would say that we're not for typically a mass market bank. I would just say, the Bank of America's out there, or maybe even the Wells Fargo, right? Or mass market. That's not us. Although there are some markets like where we're headquartered out of, where there are, several branches and it appeals to that market. In general, we're typically going to be working with commercial and business clients and the owners of those businesses, which are typically private banking type clientele, their employees, and then even with our cash value program and other programs, those are kind of feeding into that area as well.
Okay, great. Well, I found you because I have high cash value whole life insurance.
Yep.
That's what I deal with. I help clients with that. And I was looking to get that collateralized outside of the life insurance company,
Right.
and heard that there was some really good deals out there from some banks. And I logged onto your website. And if you just go to your website, you can see under the personal section, there's cash value line of credit section with a lot of information. And then I've got this flyer here, which gives a little more information. And I'll leave this up here so people can read through that. Our viewers, if you guys have any questions, put them in the chat, and I'll be sure that that Jennifer gets asked those questions. And Jennifer, can you see the questions as well?
Yes, I don't see any questions right now, but
Yeah, there's none yet. Okay,
yep.
just making sure you can see the chat there as well. Okay, cool. So the cash value line of credit, that's what piqued my interest. I reached out to you and I found the whole process really easy. You actually got back to me. I think I reached out after business hours on a Friday, and you got back to me maybe either later that night or Saturday, first thing in the morning, which I thought was great because I often am pressed for time. So
Right.
just to be able to get access and not have to wait to get my questions answered, I thought that was great. How long? So you've been with Coastal States Bank for 3 years. How long have you been specializing in this department with them?
So I actually have been doing this program for just under 3 years with Coastal States Bank. Obviously, in my banking career, also being a private banker, I touched different programs and help people utilize their cash value in different ways along the way. But our program has been out there for just under 3 years, and it's done incredibly well. It's a very strong program, and happy to provide details on what provides where we feel like we've got some sweet spots as well.
So this program started with you.
Here at Coastal States, myself and my Atlanta regional president, Gary Dowell, started the program. We sure did.
All right. That's awesome. Let's see. James says, regarding cash value line of credit, can you use it against an IUL instead of just whole life? That's a great question, and one I was going to bring up at some point down the way. You want to address that real quick?
Sure. And I can't see the questions, so I'm happy for you to share
Oh, you
them.
can't see the question. Let me,
No, but
I
it's
can share that. I'll figure out how to share it while you
okay.
answer that.
So, no, we actually stick to whole life policies. We will use whole life variable policies as well, but we do not take IULs.
Okay. And why is that? Have you guys considered it at all?
Yeah, we have, and so we've seen this in the past, and just the different. And we don't. People will want to kind of debate this and say why whole life variable products, but not the other. And because one could be more favorable, or look at that with less risk than the other. And we just find that the whole life category in general is the way that we want to stick. We have found out that for the whole life variable products, we will take 75% of that. But when we're looking at the IULs, that would fluctuate with so much different risk points. And this program is better off with having the metrics that are in place where we're not moving around. I also do regular commercial banking, and you have your standard underwriting metrics, but you move around within those. And for a program like this, our cash value life insurance program, people want to understand, what do you offer? What are you good at? How quick can I get it? Are they competitive terms? And does it offer ease of doing business? So we stick with the products that we know fit for us, with our risk tolerance and where most of our clients are. And that's what we go with.
Okay. Well, I'm definitely interested in talking to you some more about that, because James also adds, even with our 1090 design with high cash value, I sell a lot of IULs, and we got people that put a lot of money into those, and there's a lot of downside protection, and we create cash value just like my whole life policies are designed. I design IULs the same way, and they have that downside protection. So I'd love to discuss that further and see if it's maybe something you might dip your toes into in the future, because there's definitely a lot of people that would be interested in a competitive product that they don't necessarily have to go through the insurance company if they don't have to. Now, with regard to the cash value line of credit, there are a couple of different uses. We've got personal and business use. Tell me a little bit about the differences there. I know we have a couple of different applications, and I'm going to pop those up on the screen here briefly as you tell us just a little bit about those.
Yeah, there's actually three, you might even consider it four different types. But the application that you have up there right now is for the consumer. And so an individual, I should say, an individual is going to apply. And if the policy is owned by an individual, they would use this application. If it is for consumer purpose, in other words, Jane Smith is going to use her proceeds for personal consumer purposes, she would mark consumer, and we would do 100% of her cash value if her credit score is 75% or higher, or we would do 95% of her cash value if her credit score is below 750. Conversely, someone may own their policy individually, but say that they are going to use it for business purpose, and they would mark the business purpose box. There are some benefits. We ask you to get information from your CPA, of course. We're not going to provide tax guidance, but some people have different business purposes that they may have, like for a real estate LLC and a real estate investment that they're going to do. They may own a business separately, but their policy is owned by themselves individually, and they're going to use the money for their business. They would just mark business purpose. The line would still be in their personal name, and we would have a document that they would sign at closing or in the closing documents just to indicate that it was for business purpose. But that is the individual application right there. And for the individual that is business purpose, we would also score it with an individual credit score to determine our loan to value as well. So I'll pause there, James, before I go on to our other two options of credit lines.
Yeah. So this happens to be the approach I took. I have multiple policies. I was able to combine them into one. So it's kind of like a portfolio loan. So we combine multiple policies into one line of credit, and I did have those owned personally but we do use it for business purposes. And the advantage that I found was that the line of credit doesn't show up on my personal credit when we use it for business purposes.
That is correct. That's absolutely right. So if it's used for your business, you mark business purpose, it's not reported to your credit report.
Great. So any idea if it is, when you do get it reported to the personal, how does that affect your credit when you actually utilize it? Because some of us investors, we tend to utilize quite a bit of these lines of credits at any given time.
So it all depends upon, James, how you utilize the line of credit, whether it's maxed out, of course, and how you use your other lines of credit. I will see individuals that apply for a line with us and they already have one out individually, let's say with another financial institution that we're paying off. And it kind of ebbs and flows based upon their overall credit picture and whether or not they're leveraged on all their lines or there's availability. That's the biggest difference. So I've seen people with high credit scores that still have, high lines of credit, but aren't maxed out. And then, I've seen average credit scores. Certainly, if you're going to use it for business purpose, it's great that it's not going to report on your credit report because it's one less item. If you're going to apply for, let's say, a mortgage and you're concerned about your debt to income, or someone isn't going to do an overall cash flow on your business and you personally, that it's not reported out there and potentially double counted against you as well.
Right. Yeah, I've noticed that lines of credit in general are not treated quite the same as credit cards when it comes to utilizing that space that's available. You don't get the same hit as if you're maxing out a credit card. So that's kind of nice. So James asks, do you report our credit line to the bureaus, thus showing up on our credit report? So I think we just addressed that question. Yep. Question is, or I have a question along those lines, is you obviously do a credit check. You've mentioned it, and I noticed a credit check. Now, I saw it come through on 2 of the credit bureaus that I monitor. Do you guys check all 3 credit bureaus when you do that pull?
If there is availability, in some cases, so the answer is typically yes. We'll take the 3 will report, and we'll take the average of all 3. It pops up automatically with what we use. If someone happens to have their credit locked and maybe they forgot to unlock one of the 3, I'm not going to go back after we've pulled credit and ask them to, go unlock the 3rd. We try and be real reasonable and simplified about it.
Gotcha. Now, the only hiccup in this whole process for me was you ended up pulling it twice on mine. I didn't bring this up to you. One of those got reversed on one of the bureaus without me having to even do anything, but I still have both showing up on one of them, the Equifax. So is that typical that you pull it a couple of times before the?
No, we only pull it once. And so we look to resolve that without interfering, James. And if you've got one that's still showing up twice, just let me know and we'll get that taken care of just like we did the other one. But
awesome.
Typically there's just one, it's pulled one time. That's it. Unless,
cool.
Let's talk about when we would pull it a second time. We do increases for people all the time as their cash value increases. It's a very simple process. We just get an updated application. If you're applying farther out than 6 months from your original application, we will pull another credit report. If it's within 6 months, we do not pull another credit report. And we simply do a modification of the line. It's very easy. It's 1 or 2 documents that we send out, and there's no charge for an increase. And that's quite common for our customers.
Great. That was one of my other questions that I was going to ask. So that's great. Moving along then. Okay, so let's switch over to the business application here so we can take a quick look at what that is. It looks quite a bit simpler than the personal application.
Well, let's go. Can we go back to the individual one more time?
Yes.
If you look at this application, and James, maybe you want to comment, it will take you 5 minutes or less to complete, right? It's
really not very difficult.
Yeah. And we also take it electronically. So you can complete electronically. There's a box to mark, but it's very basic information, your name, your address, your, social security number, date of birth, what your annual income is, and whether it's consumer or business purpose, and who your insurance is with and your agent. So, and then a signature down the bottom. So literally less than 5 minutes. The other thing that this application is used for is if a borrower is a trust. And so, which we do trust lines all the time. If the trust is an irrevocable trust, we'll review the trust and at our cost and figure out if the trust is able to borrow. And we'll do that. So this application is used for trust owned policies as well. The instructions are to complete it are a little bit different and is included with our application. There's instructions for that. And I'm always happy to assist with that as well. So that is the other time that this application would be utilized.
Excellent. Yeah. And so just to point out, because this one just looks like it has a lot more places to fill out. But if you're the only person on it, yeah, you just fill out this top section right here. And if you have two, you just fill out both of those. And if it's a trust, you just fill out right here. So it's really not a whole lot of information to put out there. Now, when we did our application, you didn't really come back with any questions to me at all with regard to my income, what I claimed as my income on there, which was accurate, but but as a self-employed person, I'm used to giving out a whole bunch of information anytime I'm applying for anything. And I didn't get that. I found it to be very, very easy. So why so easy?
Yeah, it is it's stated income for trusts for individuals and for individuals for business purpose. We do not ask for income verification for any of those. A little bit different on our business application, which you're going to get to in just a second, but it's stated as what you provide. We pull a simple credit report, we calculate a simple debt to income, and then we're on our way. And because the information is so basic and easy to complete, unless I just can't read the information, in most cases, it's very straightforward and I move forward.
Nice. Yeah. And I imagine a lot of that, the reason you're able to keep it so easy is because of the underlying product that you're collateralizing.
You got
Whole
it.
life in general is just, it's an excellent product to collateralize.
You got it.
Okay. So James asks, to qualify, does the policy have to be seasoned? In other words, if we signed up for a policy in 2021, can we sign up and use it right away? Or is there a waiting period?
Okay. No waiting period.
As long as there's cash value in it, right?
You got it.
And there is a minimum though. We have to have a minimum of 100,000 among all the policies.
That is correct.
Okay. So James, there you go. You have to have a minimum of 100,000, and that can be across multiple whole life policies. Okay, so here's our business application. And just a little bit more information requested, not a whole lot by any means. Anything in particular you want to highlight on this part?
Yeah, so if you look down at the bottom for the application checklist, it talks about the application. It will talk about organizational documents, which would be like, an operating agreement if it's an LLC, things that tell us who are authorized to sign, documents that you would have. And then we typically will ask, it will say financial statements as requested by bank. Typically what I can tell you is we're going to ask for 1 year tax return on the business, 1 year tax return on the individual that is insured, right? Which is typically going to be one of the business owners typically. And then we'll ask for a personal financial statement. Again, you're already going to have tax returns on these. We're more so looking to make sure that this is a legitimate business, an individual that are filing returns. We're not looking to calculate debt to income and throw this through a separate underwriting like we would for a regular commercial loan. It's just more of a verification program than it is anything else. And again, we process these very quickly. 24 to 48 hours is we're returning once I've got the cash value policy statement and the application on the business side. Once I've got the 1 year of the financials and the application and the policy statement. Again, same turnaround, 24 hours to 48 hours.
All right. And so I'm going to switch back to our first flyer, which gives us a little bit of details. Now, you notice at the bottom, and this is what I noticed when I got on your website, 3.25% is the current interest rate on these lines of credit. 100,000 plus is the minimum. What's the I mean, you've only been doing this for 3 years. I guess where's the historical rate been at for these, and how do you see that changing potentially?
Yeah. So the rate that you're pointing out is actually our floor rate. So our floor rate is 3.25. However, our lines of credit, the pricing is tiered based upon the line size, not how much you use, but the line size. So lines of 100,000 to 249,999 are prime minus a half. 250,000 to 999,999 is our prime minus one. And then $1 million and on up are prime minus 1.25. So pre-pandemic, right? Prime, I want to say, was sitting at 4.75, not 3.25, which is where prime sits today, right? So those tiers came into play, and it actually, they were, I want to say, actually 5%, and then kind of fell a little bit pre-pandemic. Since probably April of 2020, as prime, we came into this wonderful pandemic that we are hopefully walking ourselves out of. Prime is sat at 3.25. So what will happen is prime rises, people will find those tiers again. And so it's beneficial to actually apply for as much as you can to see if you can drop yourself to the lowest tier. But today there's a floor rate. We'll always have a floor rate, and our floor rate sits at 3.25.
All right. And now there are changes happening in the industry among the whole life products where they've changed the guaranteed rates. Do you see that affecting your floor rates at all, or the rates that you're offering? If it's the newer products that might come with a lower guarantee, as opposed to all the ones that get locked in now at a 4% guarantee?
No, I really don't. What we've seen people doing, right, with their insurance companies is scrambling to get as much insurance as they can get right now before the deadline comes up. And that's put a little bit of a delay in assignments getting put in place by the insurance companies. But I really don't. We do a lot of payoffs for policy loans, and policy loans are typically averaging 5%, maybe a little bit higher. And then we do a lot of payoffs for outside financial institutions that do this program, but don't offer it at the pricing that we do, or they don't offer it at the service level that we do, or they don't offer trust-owned policies, or maybe business-owned policies, or they don't offer 100% loan to value like we do. So we do a lot of payoffs, we do a lot of business, and I really don't see that. Margins, right, at 3.25. There is not great risk, as you mentioned. We know where our sweet spot is with these. However, 3.25 is a great rate when you look at things. So we'll see what the market does. Prior to the pandemic and the rates going down, our program really, it was already taking off. We've got some great tier pricing.
Yeah, it's definitely appealing. What I like about this is I've got policies that are current where we get the 4% guarantee, and the carriers that I work with, we see dividends of 5.5+%, for a long time now. So to be able to build in this arbitrage with a 3.25%, as opposed to a typical wash rate loan that I might get from the insurance company, it makes a whole lot of sense to use one of these lines of credit. So especially with how easy you guys made it to acquire.
Right. We see clients, and this may come up, what can it be used for? So we see clients, and you see some features and benefits on this flyer that you have up there, but we'll see clients have it just as liquidity, backup liquidity, to know that they've got it. We'll see people leverage it right away, and they've determined purposes for it. Could be going to help their business. More investments. Can I leverage it to go out and buy investments that are out there that maybe my advisor is suggesting that I add to my portfolio? It could be charitable items used for their children's school education, maybe long-term care for aging parents. This really can be used for anything, and the funds are readily available to them at all times. There's no interest paid unless, except for what's outstanding, what's borrowed. So we see people use it for just everything that's out there. And again, their advisor typically is playing a role in how they're using that line, in addition to other items that they may want to use it for.
Gotcha. Now I see there's we talked about the minimum, but I see there's a maximum credit line, 2.5 million, among both of those, the minimum and the maximum. Any exceptions in here? Like I know one of my clients contacted you recently and they were at like 97,000 in cash value, just not quite high enough. Although I think they added some PUAs to bump it up over. So there's no question there, but any exceptions there?
Yeah. So let's talk about the exceptions. So that maximum credit line of 2.5 million, we've blown way past that. So the reason that we do have something there is in the event that we want to ask maybe for a little bit more information. Like if we've got someone with a $5 or $6 million request, maybe we say, that's great. We'd like to see a personal financial statement or 1-year tax return or something that supports something. We'll have the right to do that. But we've got plenty of lines that are above that 2.5 million. It's not uncommon at all for our trust borrowers to have very much north of that 2.5 million limit. And we've got individuals as well. So we do that quite a bit. On our minimum credit line, we stick pretty doggone close to the 100,000. The client that you referred had the 100,000 in cash value, but didn't quite make the score to get that individual to 100,000. So happy to work with him. And I did work with him. The pricing, if you're below that 100,000, is a little bit higher. The floor rate is 3.75. We don't have this out there because we just don't do it that often, but we absolutely work with clients that are so close and just not there. We don't want to discourage them. But our target line size certainly is 100,000, but we'll help and bend where it makes sense, James.
Yeah. And that's good because they'll be there pretty shortly anyways,
Exactly.
right? And then they'll be able to step up.
Exactly.
That's great. So James asked about some of the answers, some of these things we already answered, but he asked about the variable. He sees it's a variable loan rate, Wall Street Journal Prime. Is there anything, is the Wall Street Journal Prime effectively the federal prime rate, or is there some, does it vary sometimes? I guess, how's the Wall Street Journal Prime configured?
That is what we're using as Wall Street Journal Prime.
I mean, do you know how where the Wall Street Journal gets that from?
No, I don't.
Okay.
But we go with that published rate, and so as it changes, and this may be a question: how often could my rate change? Right now, obviously, it's not moving around, but your rate could move on as often as a daily basis.
Okay.
Right now, most people have been sitting right at that floor rate and not in the tier rates. As prime moves back up, which is going to take a while for it to get back up, so the tiers make sense, that's where we could see people adjust daily. And pandemic wise, as it was coming down, right, we saw people getting adjusted down daily, which they appreciated.
Gotcha. How do you guys configure the minimum payment required on your line of credit?
It's interest only based upon the amount that's outstanding.
Okay. So you just pay the interest each month then?
That is correct. That's all we require. Right. If someone wants to pay additional principal monthly, and we have some of our clients set up on payments where they want to say, hey, I want an additional $2,000 a month going to principal, we can set that up. We also will have clients that maybe once a year come and have a nice bonus and they want to pay some principal down. We handle that for them as well. We coordinate that with people all the time. But the only thing that we require is interest only based upon the amount outstanding.
Gotcha. Now, you probably haven't seen any videos on my channel. I advocate for something that I call dynamic banking. which is utilizing lines of credit to flow all of our cash through that, offsetting interest charges. So oftentimes I will get a lot of transactions when I fully switch over to you guys as my main checking account. Money comes into my checking account, I move it right into my line of credit, and I move it out when I need to go pay a bill. Any issues with Coastal States Bank as far as just moving money regularly in and out of that line of credit, or is that just expected?
Our clients can utilize the line as they see fit. Yeah.
Good.
Yep.
All
We
right.
have clients that take the whole line out in one shot, and we have clients that don't use the line at all.
Okay.
But there's no minimum draw requests. And we do, as James mentioned, if you want to have checks available for you, we will open a checking account, and the checking account is attached to the line of credit, so they will flow back and forth.
Yes, and you guys did that for me too. Again, it was so easy for me to open this up. I opened up my checking account with you. I opened up the line of credit, and I'm in the process of transferring making it my main checking account so that I can have the line of credit there tied with it.
We
The only
appreciate that.
yeah, the only hiccup I had there was the really low limit on checks that I can deposit. Most things get deposited automatically these days, but 4,000 I think is the limit for a check standard. And to get around that, we just need to fill out a form, and then you get the exception approved.
Yeah, we collect just a couple months worth of statements that indicates that you need that, because that's a regulatory item, if you will, since mobile banking is so very, very popular, right? And the risk that's out there. So we collect a couple statements that indicates that, yeah, you actually make deposits of that size. And yes, James, you're right. We do have you complete a form. We sign off on it, and then we get exceptions made that make sense.
Yeah. And me being out, and I'm in the rural area anyway, so I don't like to drive into town to a bank, which I have to do here anyways when I get a large check. So it's really convenient for me to be able to just get those accepted via mobile, so I can avoid having to make those unnecessary trips. So I appreciate that. What do you think, what would be a circumstance where you might decrease somebody's line of credit?
If we find that their cash value has gone down for some reason, and we do annual reviews of statements as well, and sometimes periodic checks. And it doesn't come up often, but in some cases it does. Or if someone happened to end up taking a line or some proceeds internally with their policy, most insurance companies are all going to notify us, and they're required to notify us with changes. But in some cases, things eke through for certain reasons, and then we would give them the opportunity to either take care of whatever that issue is, or we would reduce the line.
Okay, yeah, because I was thinking you guys should be getting notified if anything happens on these policies.
We are.
Just with the disclosures or the things that I had to sign for the collateralization. Is it possible? I've got funds collateralized with you guys. When I go and make my new payments next year, and I add thousands or tens of thousands of more cash value into my policies, and I haven't gotten the increase from you guys yet, do you know if I can access that? Do I just need you guys to sign off on it? If I can access that from the life insurance company before you guys collateralize the additional amount?
You would want to come to us with that, not your insurance company, right? Because if you've got another loan out there with someone else, then we're going to come to you and say, James, you got to pay that off, or we need the line paid off or paid down, depending upon what the circumstance is. Because we're going to be the only one in there, right? We can't have multiple lien holders, whether it's the insurance company or us. But what you would do is you reach out to me, contact me, either email, text, or call, whatever's easiest, and say, great news, I have more cash value. I'd like to utilize that. And I'd ask for an updated application and a statement that shows that. and we'll get you increased. It's very, very simple. That's what I was mentioning up front, that we do that quite a bit. We have people that will come back to us, and I mean, it's
Gotcha.
people love to have the availability of the extra cash flow for the different purposes. And as soon as their value goes up, they want to utilize it.
So that brings me to another question. My whole channel is about helping people maximize their cash flow. So we're always trying to keep our money moving, and working for us. Is it possible when our renewal comes around then, is there a way that you guys can recognize that it's going to be increased as soon as we put money in there, and we can make that happen at the same time?
Yeah. So again, I have agents that, like yourself, that are clients of ours. They know that it's coming up for their clients. They'll send me, hey, this just happened. And we go ahead, and all it takes is an updated application from the client, the statement, which usually a lot of times the agent will provide, and we're going to do a modification to increase that line of credit for the client so they can utilize it. If it makes sense, also, if they maybe they didn't have a credit score at 750 or higher, and they want to move into the 100% loan to value versus the 95%, we'll run credit again and see if we can get them to 100% and even increase the line further for them as well. In some cases, pre-pandemic, and this will come up again, clients want to get into the highest tier that they could because they get into the lowest pricing tier as well. So, but yeah, we work all the time as the cash value goes up, we will modify the line to increase the line up.
Gotcha. Yeah, I just paid off my 0% credit card. So my credit score is going to be up close to 800 now. So I would qualify. I was under that before because I'm utilizing my 0% credit cards, which dinged my score. And but I don't need access to that extra little bit. I think we did 95% of my cash value. I don't anticipate needing that other 5%. So I'm not interested in getting another credit check until next year for that. But yeah, it's good to know how that affects it. As a reminder, if any of you viewers have questions, put your comment in the chat and we will get it answered here. We're just about out of time here with Jennifer. Let me see what other questions I might have had here. I think we covered everything that I was interested in talking about. Can you think of anything I didn't ask you that might be important?
A lot of people have questions about how documents are handled. And I would say this, our process typically is, our process flow is, once we get your application and your statement, we'll get you processed and get an answer to you within 24 to 48 hours. Typically after that, we'll have loan documents to you within 3 to 5 business days. Typically we're running about 3 business days, and your documents are going to come all via DocuSign. So it's electronic, with the exception of your insurance assignment, which we'll email to you, ask you to print it, sign it, date it. If the insurance company requires a notary, you'll have to get the notary, which Guardian's one of those companies, for instance, and you would email that back. Once we have your documents back, we'll send the assignment off to the insurance company. And once the assignment has been recorded in place with the insurance company, your line is available. Some insurance companies are placing assignments in 3 business days, very quick turnaround, and others are taking a little bit longer, especially with some of the law changes that are coming up, that and they've moved to a couple of weeks. But we get your line in place as quickly as possible. Our process is very fast and very streamlined and very simple. The assignment sometimes from the insurance company can take 3 business days to a couple weeks, but we'll let you know what we've experienced on that side as we start working with one another.
Gotcha. Yeah, I think our process, it was about 3 weeks beginning to end, with almost all of that being my fault because I was traveling when we got started. So 3 weeks, I thought that was really fast. Even, I mean, the times after I got home, I think it was probably about a week. It didn't really take that long at all to get things set up. So James asks, can the monthly interest only payments be rolled into the loan just in case there's a cash flow shortage in certain months? I would say it's a line of credit. It's not a loan. And if you're doing your dynamic banking, you don't have to worry about the monthly payments because you're going to be moving money in and out. And anytime you move money into it, it counts as a payment, counts towards that that minimum payment. So we don't really worry about minimum payments when we're practicing our dynamic banking. Anything to add there, Jen?
Yeah, so I think if you're coaching your clients and maybe have some separate terms for them, um, we'd want to cautious in how we coach our clients in general is there's an expectation that you're able to make that monthly interest payment. Um,
Oh,
and
absolutely.
and so because you don't want to get yourself to a point where you can't make the pay you're not able to make the payment. So I think interpretation again, James, I'm sure you're doing a very good job coaching your clients, but we, kind of in general for people out there, there is a bill monthly, you're expected to be able to pay for it. And so many clients are leveraging their line fully. The line's really not there. The availability on the line is not intended to make your payment, right? You've got not a separate source.
Right.
A lot of agents out there are doing illustrations for their clients where they're saving them monies on other things, or they're showing them the income that's coming in for them to make the payments. So a client typically should be able to have that money.
Yeah. So just for your knowledge, when what we talk about on this channel and in doing dynamic banking is any income that comes in makes its way into the line of credit. So if somebody's earning $8,000 a month, but they might almost all of that 8,000 might go out in bills. Well, 8,000 is going to go into the line of credit at some point and sit in there until those bills get paid. So that satisfies interest. That satisfies payments, minimum payments.
It does. Keep in mind though, the timing of they're still going to get a bill, right? So,
yes.
So that's what I don't want people to be confused about. But we're on the same page in how you coach your clients. I'm sure you walk them through. This is how this will work.
Absolutely. Absolutely. So Way Out West asks, can you employ this type of credit line with any other financial vehicles like an annuity or something else like that?
Unfortunately, the answer for our cash value line of credit program is no. We're simply using whole life cash value insurance.
Okay. And that makes sense. I'm not sure how an annuity would be utilized for that. Maybe if somebody had maybe he's thinking of like a SPIA or something that's short term like a CD. Maybe that's what he's thinking, something like that. James says, can you walk us through the actual easy mechanism of getting cash in and out of the line of credit? For instance, do you mail us a check, or is it ACH or wire transfer? Do we have checks?
I can address that, yes. So the multiple ways that you have access to the line of credit is really several ways. Number one is you can request wires. And those are at no charge. So we might have someone that's going to a house closing and they're using this line as monies to go towards that closing. We'll wire it. They may want it wired to their personal account someplace else so that they can use it for whatever they're going to use it. So we can do wires, and we do wires same day with the wire request form that we'll send you. And then we'll do a call to verify all the information, of course, for safety. So wires one way. We mentioned the checks already. So if you want access to checks, we would open an account that we would attach the line to, and those checks automatically is going to come in advance off the line. So checks is another way, and the other way really is wires. You can go out, you're able to, and you can see it online. They are attached, so you can move monies back and forth as well.
Thank you. Thank you. Christopher Forbes asks, are IULs out of the question? A little late to the podcast. We addressed that earlier on. And yes, currently they're just focused on whole life. That's all they anticipate, but I'm going to work on that. I'll keep pressing. I just, for your knowledge though, I do have a lead on a small local bank out of Colorado that does offer a line of credit or a loan against an IUL. And I haven't had a chance to follow up on that, but I will be following up on that to see what's going on. So, and when I get that information, maybe I can share that with you, Jen, and you guys can consider what somebody else is doing. It's the only one I've heard of so far. So
Yeah.
Way Out West notes he's seen people cash out annuities for immediate cash or use it as collateral, but he was just putting that out as an example just to see if there was any other tools or vehicles that could be used. So no, at the moment, just whole life products. Just whole life products. All right. Any last chance to get your questions in? And we'll let Jen go. We appreciate you being here and sharing this with us.
Thanks
Jennifer,
for the opportunity.
Yeah, I really appreciate you helping me get my line of credit. Like I said, the process was very easy, and so far so good. I'm very happy with it. I've had it now for about a month now, maybe a little over a month, something like that.
I think a couple months. So if there
Has it
are
been that long already? Time is flying.
If there are any questions outside of this, my contact information, of course, is on the flyer that James has posted. That's my cell number, by the way. Feel free to call me, or you can also email me. My email address is there. And as James mentioned previously, you'll have a fast response.
All right. Well, we appreciate that. And with that, I think we will finish this stream up. So thank you. Appreciate all of you guys tuning in here. And if we end up with a bunch of questions that didn't get answered, maybe we can invite her back again in the future. So thank you very much. And I expect you'll hear from quite a bit of my clients. If you haven't already, you probably already started hearing from some of them. So
thank you, James. Appreciate the opportunity. Y'all have a great day.
Take care. Thanks,
Bye.
everybody.